Hi, everyone. Thanks for coming. In addition to being Modern Treasury CTO, I'm also our resident payments nerd. And what that means is I spend a lot of time reading PDFs and white papers about different payment systems throughout the US. And it was this curiosity that led me to joining the Working Group on Reconciliation for a new payment system in the US called FedNow. And it was during one of these working groups that I had the pleasure of hearing our guest talk for the first time about FedNow and the promise that it was going to bring the payments to the United States. So please help me in welcoming to the stage Connie Theien. Good to have you, Connie.
Thank you. Nice to be here. Good afternoon.
So I think we should start off by having you introduce yourself. Tell us a little bit more about yourself and your role at the Fed.
I'm Connie Theien. I'm the Senior Vice President and Head of Industry Relations for the Fed. And as part of that role, my challenge is to engage stakeholders in the payment system broadly in payment system improvements that address our biggest pain points and opportunities. I've been in payments for over 20 years. I joined the Fed in 2000, and my original tasks were focused on driving adoption of direct deposit and direct bill payment, leveraging ACH. You know, we were sponsoring minor league baseball games and billboards to try and get people to get their paychecks electronically. Within a few years, I was working on proofs of concept for check imaging, and then worked on the rollout of Check 21, and sort of, tackled that challenge and adoption of check imaging, broad adoption within 4 or 5 years. And in 2013, based on our Fed leadership kind of looking strategically at the payment system and the involvement of so many different entities in payments, we stepped back and said, we need an industry relations function that can work with corporates and fintechs and providers alongside banks to help drive modernization of the payment system. And at that time, the big focus was addressing the emerging opportunity of instant payments, seeing some of that happen in other countries, and also some of the emerging threats associated with fraud and new schemes and challenges. The third focus of that strategy when we started this work was payment system efficiency, and in particular, working to solve the long-standing pain points of businesses that we're still grappling with. And even today, we're going to talk about how we can solve some of those with instant payments, but that we're still grappling with just a patchwork of systems, payments and finance systems that don't work together and create a lot of efficiencies and costs for businesses and the economy as a whole. Wonderful. So I've devoted my career to kind of advancing these themes and trying to catalyze momentum and energy around them.
Of course, and it sounds like to great success. I mean, check imaging, direct deposit. Raise your hand if you get paid via direct deposit. I mean, it's everyone in this room. I mean, that's right. It's ubiquitous now, along with check imaging. So, we're talking about FedNow, or we're going to be talking about FedNow on stage today. I'm a payment nerd. I said that at the top. For the non-payment nerds in the audience, can you tell us a little bit about what FedNow is?
FedNow is an instant payments infrastructure that will be accessible to financial institutions like our other payment infrastructures. It will support end-to-end instant clearing and settlement of payments. It will operate 24/7. These transfers will be credit push, which means the person with the money who's paying controls origination of the payment, and it's good funds. and the funds are irrevocable and available immediately to the receiver to use. When we, sometimes especially, if you're not a payment geek, it's just as helpful to understand. So yeah, I think I have some of that in my current payment options. And so if I were going to kind of distinguish it from what's available today, you can think about wire transfers as being instant, but really generally just from bank to bank. Most of the time, not instant from sender to receiver. They are irrevocable, but it only operates during banking hours. ACH might settle as fast as same day, but it's a batch system, so certainly not instant, and again, banking hours. And even cards, which, especially from a consumer perspective, might feel instant using your debit card. Businesses know they're not instant because especially on they don't settle. They might clear instantly, appear to the end user to be instant, but those funds don't settle outside of banking hours. And so when you have businesses especially that have a lot of their revenue coming in over the weekend, they can actually have quite a long wait for those funds to be available to the business. So it really is creating, new opportunities for control of the movement of money 24/7, 365, down to the second for businesses and consumers.
So how did the Fed arrive here? If we're, depending on how you count, it's maybe been 40 years since we've seen a new payment rail come out of the Federal Reserve. I'm sort of curious, what was the Federal Reserve seeing when they decided, let's go down this path of creating and launching FedNow?
So I mentioned that we, really took a look at the opportunity for real-time payments back in 2013 and got the industry together, established a faster payments task force with 320 organizations, businesses, banks, fintechs, everyone and anyone who really had some passion around payment system improvement. And that group developed a roadmap and recommendations for what's the best way to achieve this in the US. And the Federal Reserve, going into it, our view has always been relative to our services that, we're here to support the industry, fill the gaps, and make sure that payment system capabilities are broadly accessible. But where the private sector is able to achieve those objectives without Federal Reserve participation, we don't necessarily engage. And so we were really looking to the industry to see how, what they thought we needed to do to get instant payments ubiquitous in the US. And one of that group's recommendations was that the Federal Reserve leverage its infrastructure, its network, to help accelerate the adoption and make these capabilities accessible to all financial institutions. And so we considered it, did lots of evaluation, went out for public comment 2 or 3 times, because that's what we do at the Fed, to make sure that we really got all stakeholder perspectives. And from that analysis, decided to move forward in 2019.
And it sounds like that acceleration is key. I mean, I tell a lot of our engineers, in the US, we're always doomed, blessed to have 2 options for every system. For ACH, we have Fed ACH and EPN. Wires, we have FedWire and chips. For faster payments, we have RTP from the clearinghouse, and now we have FedNow. It sounds like the ubiquity of instant payments was the reason for coming up with that public option.
Yeah, in the public comment, stakeholder feedback, and especially financial institutions, one, they noted that they appreciate options, choice in the marketplace and competition, and feel like that there has been benefit and advantages to having that competition with multiple network options. Even when you look across cards, in the US, there isn't any payment system with only one provider. And it's, really reflective of the marketplace, and we don't mandate how these things develop in the US like they do in many other countries. And the Fed, I think, brings unique value in introducing FedNow because we do have a long history of serving all financial institutions, and especially smaller institutions. We have the support infrastructure. We have the network that connects all 10,000 banks to, master accounts and settlement at the Fed. And so there was also, efficiency for the system as a whole in leveraging the capabilities, the networks, the relationships that were in place.
Got it. And are there any specific use cases that the Fed said to themselves, hey, we have to enable this use case through faster payments? Or are there any use cases that came up during those public comments that people really wanted to see?
There were some, but that's really been the focus of our product development efforts. Over the last couple of years, we established a FedNow community. I think we're up to maybe 2,500 organizations participating. We have a pilot program with 120 processors and financial institutions, and we've really leveraged those groups to help us understand what the highest priorities were in terms of use cases. We've also done a lot of research, consumer and business surveys, to understand sort of priorities, needs, use case focus. I'll mention that we have these consumer and business surveys, published summaries of the results out on fedpaymentsimprovement.org. We've been conducting them for 3 years, and there's a lot of really good data on what both businesses and consumers want, expect, need out of these payment systems. The research and the feedback from our communities have sort of focused, a few use cases have risen to the top, especially that could be early movers, given some limitations in network reach and capabilities across the ecosystem. Disbursements is an easy one to be looking at and thinking about. So we look at the insurance industry, claims payments, those types of things. There's a lot of interest there. But you can think about disbursements too, even relative to marketplaces. So realtor commissions or even marketplaces, whether it's more consumer-oriented, eBay, Amazon, paying out sellers. But there are lots of those marketplaces in particular industries where this could be a valuable option. Disbursements too, you can think of in terms of payroll. It's been a huge sleeper surprise use case that really in all of our early on analysis, we never said, oh, payroll, that's the thing, because inherently we're all sort of just accept as fact that we get paid on the 15th and the 30th of every month, and it's a batch thing and it's predictable. Why would you need or want instant payments there? But it started in the gig economy, with Uber drivers and other gig kind of workers, and who are maybe a bit transient and in and out, and are doing those kinds of jobs specifically because I want a quick buck here to supplement, or lots of Uber drivers I meet are trying to pay for their kids' college. But it's expanded to the idea in the current economic environment as a real differentiator for employers competing for talent, and especially in the service space and those types of businesses, for someone to be able to access their earned wages either on demand or at a steady schedule every day. At the end of the day, you have lots of laws being passed that require employers to pay someone out on their day of separation, to pay other things instantly. So huge opportunities in the payroll space. Account to account is something too that in the business space, personal as well, but in the business space, being able to move money between your own accounts, whether it's for cash management purposes, if you really have a footprint, relationships with lots of banks, or for investments, and being able to transfer money end of day into accounts where you're going to earn overnight. Those types of things are really attractive and valuable for businesses. From a business consumer standpoint, bill pay is big. When you think about pain points for consumers, being able to pay at the last minute or pay exactly when they have the funds, and to know and have certainty and confidence that it was paid and credited to their account. Bill pay is a huge use case opportunity out of the gate. B2B can be more complex and complicated and maybe require more in terms of supporting systems like modern Treasury, but huge opportunity there. From large to small businesses. We've talked to a lot of small businesses that obviously are managing cash flow, day to day, minute to minute, and may have to actually buy goods, cash on delivery types of things. And so getting paid instantly gives them the ability to then go down the street and buy the supplies or goods they need instantly. So those are some of the things, even from a starting point, when there's maybe limited reach, you can begin to build a lot of value around.
I think some of the things is an understatement. I think you described 6 giant use cases that I think would apply to a lot of the businesses in the audience today. And so to go along with that, I might ask, what can businesses do? What can the companies that range from small to large in this room do about FedNow? What do they need to prepare for this, this upcoming pilot program?
Well, I think that the biggest thing you can do is, one, start thinking about your pain points or opportunities. Where would your business benefit from being able to move money on the weekend instantly, or move it immediately with certainty, or receive it where it's irrevocable and you have the certainty of that money someone just paid you. So, start to think about some of those things where the value is in your business. The other thing I would look at when we do our business research and surveys, the speed aspect is really attractive, but equally businesses point to where can this create more straight-through processing and backroom efficiency. And I didn't note it when I was talking about comparing this to wire ACH card, but this is the only payment system in the US today that's built on the ISO 20022 messaging specification, which supports an incredible amount of data to be carried along with the payment, and can support end-to-end transmission of invoicing information and then remittance information, and really is an opportunity to unlock straight-through processing, something that's sort of been the nirvana of business payments for a long time. So think about that, the instant notification, carrying all of this data, and where it could really enhance your backroom operations. Aside from just thinking about where's the value proposition for your business, start talking to your solution providers and your financial institution. The most important way that you can at least help us to increase reach is to express your interest to your providers, to your financial institution. Our hope is that we can maybe even improve upon that 5-year window that it took for Check 21 adoption, and get the large majority of financial institutions on board and capable of supporting instant payments in a window narrower than that. So those are 2 important actions that you can take to really make this happen.
Those are things that businesses can do right now. On the financial institution side, because you mentioned talk to your financial institution, I was wondering if you could tell us a little bit about the ongoing pilot. You mentioned over 100 financial institutions in the pilot. I'm wondering if you can share anything about the timeline and what we can expect for when those banks will go live.
So our pilot's been in place for about 2 years. We really started it to make sure that we had input into our product design and development. And then it became more operational last fall when we opened up a testing environment and started engaging them in testing. April 1st, we opened the window for financial institutions to certify, to complete all of the testing requirements and certify readiness for go live in July. There are 120 organizations. About 80 of those in the pilot were financial institutions. And we really recruited to make sure that we were getting kind of all flavors, banks and credit unions, small community institutions, as well as some of the largest banks in the country. But we also focused on processors who are key enablers for banks and help to run their back-end core and accounting systems. And so about 40 of those organizations in the pilot were processors, bankers, banks, corporate credit unions. So the pilot program has been a good foundation. Now we have, depending on how you count, 9,000, 10,000 more financial institutions to get engaged. Lots of them are, in the pipeline, especially, working with their processors that they need to get in their queue and their pipeline. And so we're optimistic, that the network growth will, really begin to accelerate beyond what the industry has been able to achieve so far, that FedNow can help to bring along, bigger numbers at especially smaller organizations.
Any hiccups that came out during that phase? Any hiccups, any problems, challenges maybe that faster payments 24/7, 365 might pose to a lot of those financial institutions?
I think the hard thing about, building a network like this is just all of the interdependencies. Really thinking about the tentacles in the back room to all the systems, and certainly financial institutions out of the gate go, okay, I need my core to be able to post 24/7 and operate in that way. But pretty soon they start to think about, managing my Fed account 24/7 and liquidity, what are the considerations for that? What about my fraud engine? Do I need to make changes to that given the nature of these payments? If they're going to send, they need to, update their customer interfaces and channels, their mobile banking platform, their online banking platform, their corporate treasury, capabilities. So, and in all of that, it's getting all of those providers, moving at the same pace. I think about it, I hearken back to my early homeowner mistake. When I decided I could be my own general contractor for my kitchen remodel, which was an absolute disaster because scheduling and getting all these people to do the work and be in sync and in line, that's sort of the challenge we have with building a whole ecosystem that can support instant payments. And I think that some of our pilot participants started to run into that complexity. They were ready, and this provider is ready, but this provider wasn't quite there. So that's what we're working on, and that's why, that's why I come to forums like this, is really to evangelize beyond just the financial institutions and work with organizations like Modern Treasury to try and, broaden the reach of this in the ecosystem and get capabilities end-to-end lined up to support this.
And speaking of end-to-end and readiness, do you think consumers are ready? I mean, I think everyone in this room would love to have 24/7, 365 that we can send to everyone on our phones. I mean, I think consumers would like that, but are they ready? Do they know it's coming? And maybe to tack on, do you think FedNow will change consumer expectations of what they expect from their payment systems in the future?
I think consumer expectations are there. They already expect this. It's a lot of what's driven us to this point. You know, they have their life in their hand, and they expect to press a few buttons and whatever they want done is done instantly. We have instant communication. They can have products delivered to their doorstep, you know, hours after. And so they really don't understand the idea that it should take a day or two, even hours, to move money and to be able to spend it. In some respect, you know, a lot of providers have capitalized on this and are providing payment services that appear to be instant, you know, and deliver some of these features that consumers expect and want. On the back end, those of us, you know, in the industry then are bearing some risk and kind of patching together some things in the back. There's a little bit of duct tape and paper clips to support this appearance of instant. But we are, you know, building and bearing some risk in the system when settlement doesn't happen at the same time that funds are being made available. So a lot of this is the infrastructure, the industry, the providers, getting the core capabilities to support what we need to deliver to consumers, what they're already expecting and wanting.
Got it. So, you know, just as we wind down here, just as we get to the end of this, I sort of want to focus on the future. I mean, I want to go 5 years in the future. I want to ask you, what do you think FedNow will look like in terms of participation, adoption by consumers and businesses alike? Where do you see FedNow 5 years from now?
Yeah, this is a surprise question. You didn't tell me who was going to make me prognosticate.
I did come up with this one on the spot.
Well, you know, as I said, I'm really hopeful and optimistic that we should, as an industry, be able to achieve, you know, reach. That we virtually should have all financial institutions participating in instant payments within that time frame. That, you know, at that point, we shouldn't need to be building capabilities to figure out, can we or can't we, you know, complete this transaction instantly? Is everybody involved participating? I would hope it's as seamless and ubiquitous by then as ACH. I think it holds huge promise for innovation, and you've got some great folks here at the conference who are going to talk about dreamy things and embedded finance and some of those things. I think this creates huge opportunity for some of the vision for just invisible, seamless payments that, you know, really just happen the way we need and want them to without a lot of effort by the end user.
Wonderful. Well, thank you, Connie, so much for joining me on stage. And yeah, we're looking forward to FedNow, not just as a company, but I think consumers alike. We're really excited for this. So thank you for talking to us about it.
Thank you. Appreciate it.
This is Ben, and this is Ben's company.
$billion company.
Meaning you have lots of cash flying around?
Yes, we've got vendor payments coming in and customer payments going out and lots of banks in between. Hey, we need another integration. Stop.
How are you keeping track of all that cash?
It's all in this spreadsheet. Everything's under control.
Right. And how many products are you supposed to ship out this year?
Oh, no. Not again. The payments aren't reconciling.
You know, modern Treasury can track all of your funds automatically. It's a simple, easy-to-use platform that helps your business manage all of its payment operations, from payment initiation through approvals to reconciliation.
That's impossible.
Walk with me. This is your company with modern Treasury.
Wait a second. All of the banks are in one place?
Yep. Watch this. You can see incoming cash and outgoing payments as soon as they happen.
Well, what about reconciliation?
That's instant too. Modern Treasury works with any payment type, payment size, or volume, so companies can scale and scale and scale. Just think of how fast you can close those books.
We could build everything in our product roadmap.
Modern Treasury takes care of all your money movement, so you can focus on revenue. Ready to head back?
It's so calm here.
Ben? Modern Treasury. Move money easier, grow faster.